All right, so why don't we go ahead and get started? I see a lot of unfamiliar faces, so some people might think I look unfamiliar also. I'll give you a little bit of background about myself. I started and operated an ATM company with my wife for 28 and a half years. We sold that in May of 2023 to an ATM company that was using syndication to purchase other ATM companies. And big news today, they got raided by the FBI, the company that bought my company. That's because they raised all this money and then he stopped paying his investors. The guy that bought the company is going down with the Schwinn, if that's the right way to say it, if anybody remembers what a Schwinn bicycle was from back in the day. But we ran that company for 28 and a half years. It was producing a truckload of money, but we decided it was a good time for us to get out of the industry. We figured it was at that time. And a little bit before we finished, we had met Brad through the Tony Robbins Platinum Partnership and got into apartments investing just to have a place to go park our own money. We started that January of 2021. And since then, we executed on our first general partnership. So we got in January 21, May of 21. We raised on our first deal, raised a little over $5.5 million in 4 days to close out that deal fairly quickly. I was very surprised. I thought it maybe be a one-hit wonder, but lo and behold, it kept growing. And we've done 14 deals. I'm doing my 15th currently. We've raised a little over $84 million in total. And after I finish this raise, we'll be up over 86, depending on where it lands mid next week. I'm only supposed to raise 2, but he said if I raise a little bit more, they'll take it. I'm almost there, but wish me luck. It's not been the easiest. And the people that are putting money in the bank are the people I haven't called. So the people I've called, if they put their money in the bank, we might end up with way too much money. So a couple of things I wanted to talk about. So that's been my experience over the last 3.5 years. I've been in the mastermind, as in the billionaire mastermind. I've been a mentoring student. I'm still a mentoring student, and I am currently a coach in the Sunrock ecosystem, specializing in capital raising, but I also ran a business for 28 and a half years. So we understand negotiations, business in and out, and profit and loss statements. And anybody that's operating apartments now, paying attention to your numbers and your income versus your outflow is very important to ensure you can cover your mortgage. So then you don't end up like some of our friends in the industry that are having trouble with cash and not being able to keep their apartments and having them turned over to other syndicators like Rise 48. Or there's another gentleman, I can't remember his name off the top of my head, but he's been being awarded deals just for the debt. So they're not even have to go raise money. They're just, the banks are like, you take it over because you've been such a great client and operate it, and we'll let you go. And it just wipes out all the LP equity. So I wasn't sure exactly what I wanted to cover tonight. We could talk about the 7 elements of powerful speaking, which are important in capital raising. We can talk about the top 20 mistakes capital raisers make with their first, second, third, fourth syndication. I got a whole list of those. We can talk about pitch decks. Why don't you put in the chat what you would like me to cover? Because I would love to give you what you're looking for. I know what I'd like to shove down your throat, but you tell me what you'd like to hear, because I always like to, even with talking to an investor, I want to know what the investor wants. So then I know if I even have something to even offer to them. So if you want to throw in the chat what you would want me to discuss tonight or cover, I have a handful of things I can go over, but I just thought I'd ask to see what everybody would like to hear tonight. So if you want to throw that in the chat, go for it. Pitch decks. Thanks, Ivy. Perfect. It looks like capital raising is winning out. We might get back to pitch decks. Depends on how that goes. Mr. Michael Green, how to find deals. I'm going to tell you the secret to finding deals. When you get on your first team, raise a truckload of money, and you don't have to look for another deal. They continue to find you. And that is the truth. I have so many deals that come across the desk just because we have the ability to raise money that people come to us all the time. And there's I say way more no's than I do say yeses. So we're going to talk about the do's and don'ts and some capital raising. If you're not speaking, if you could do me a favor and mute. And if you have something to say, you can unmute yourself, or you have a question, or if you want to throw your question in the chat, I have the chat up. I will keep an eye on that also so that we can get through as much as possible. But I'm going to go fairly quickly with the top 20 mistakes a capital raiser makes, and then I'll get into the do's and don'ts and some things that I find that work really well in the space. And I will get through quite a bit here. This is my first time coaching on a coach's corner. So I'm going to do the best I can to serve all of you guys tonight. I got asked to do this yesterday. I wasn't supposed to be on for a couple more weeks. So I didn't really have a truckload of time to prepare, but I'm speaking next weekend in regards to capital raising on another stage. I'm a little bit prepared. But some of the biggest mistakes initial capital raiser made, and this is one that I made on my very first raise before we were even raising. And that's really, I failed to understand securities law. So if we're doing a 506B, and I'm going to throw that, we got the property under contract and we weren't even raising it. And I was starting to talk about, if you were looking to get into apartment investing, if you were this or that, and I was posting this out on my social to the ether, and my partner immediately, because I think she signed up to watch my social because she knew I was and she called me the newbie. And as soon as I posted something, immediately she's like, you have to take that down. And I was like, I'm not talking about our deal. I'm not advertising that I have a deal. I'm just simply asking if there's people out there that may have interest. We took it to our attorney, and my attorney said, just to be conservative and be careful, just don't talk anything about apartments until you're done with this raise. I learned very quickly on a 506B, you shouldn't be advertising anything regarding looking for new investors or getting out there trying to bring people in. Another thing that new have problems with is they don't always use the proper documentation. They think they can go onto a portal or a website or chat GPT and pull up a PPM and create their own. I think that's fine to one extent. You have an attorney that's going to back you up if you have a problem with those documents you pulled off the web. So that's why we hire professional attorneys every time we do a deal, just to ensure that if something goes wrong or there's a I not dotted or a T not crossed, it's on their head along with ours, but they're there to protect us, and that's what we pay them the big dollars for. And here's number 3, using general solicitation incorrectly, and I was guilty of that. If you're doing a 506C, neglecting to get your accreditation verification from third parties, you and I aren't really authorized as a syndicator to verify somebody's accreditation, and you don't want to be the one that's saying that you're verifying that you're accredited. Say Matt signed up for my one I'm doing right now, and it's a 506C, and he skipped part B of going to the accreditation verification, just pulled the file, wired in his money, and away he goes, and I can't catch up with him till way down the road, and turns out he's not accredited. That's on me. That's not really on him, because I am the syndicator, I'm the backstop, and I'm supposed to be there to protect the asset. And here's a big one that I've seen a lot of in late 2022 and most of the way through 2023, underestimating your timelines for capital raising and closing. I've seen so many extensions that have happened out there in the marketplace. And then GP teams going from 2, 3, 4 to 14 people because they're trying to raise $6 million and everybody's bringing $50. So it ends up being very difficult. And if you have a GP team of a massive amount, you're opening yourself up to a possible SEC violation, because not everybody can have substantive or significant duties as being a general partner on the team. And if you're strictly a capital raiser, I would suggest you have a high net worth and sign on the loan, because signing on the loan qualifies you for having substantive duties. But then you also take on the risk of, if your team doesn't perform, you won't be able to perform and get another loan down the road. Inadequate knowledge of your capital stack, not understanding exactly how to structure your equity and debt. This is happening more and more. I'm involved in a couple of deals as a limited partner, where they have the general partner, and then they have preferred equity, and then they have us. And that preferred equity seems to sometimes stand right in the way of progress, and they dictate most of the terms of the deal. So you got to really understand the stack when you're getting into it. And here's a big one. This goes to, where's the question? One of the capital raising do's and don'ts: misaligning my goals with my investors' goals. And what do I mean by that? If I come to you and I go, I have this great deal I'm raising on today with Rise 48, and I'm like, Benjamin, this is the best one for you, man. This one's going to give you the full 60% depreciation that we're supposed to get this year. We're going to have preferred returns at 12%, like everybody's promising and giving out there. And you're like, I don't need cash flow. I don't need preferred returns. I don't need depreciation. I'm just looking for a long-term gain. So I'm selling you on cash flow and depreciation, and all you're worried about is long-term equity growth. So if I don't get on your side of the fence and ask the proper questions and understand what it is you're looking for as an investor, I could be selling you on the wrong piece of the puzzle, and then I lose you completely into my investment. Where if I knew you wanted cash flow, I would never talk about my depreciation, and I wouldn't talk about the long-term growth. I talk about how quickly can we start returning dollars back to you. So now that's cash flow. If you are a depreciation guy, I go, I understand you might have a tax issue. We have a huge depreciation play on this opportunity. I'm going to talk to you about how to help eradicate part of your tax bill with my depreciation. And then the other one, we could talk about the long-term equity play if that was the case. But you can always talk about anything to do with the deal, but you really want to understand what the person on the other side of I'll just call it the screen tonight, what they're looking for. I know what I need to sell, but if I don't understand what you're looking for, I could be trying to sell you apples and you're over here in the orange aisle, and we're going to miss each other, and it's just not going to work out. Where if I understood exactly what you wanted, I could go, it's right here. 2x multiple, 4 to 5 years. And you'll be like, that's what I'm looking for. I'm looking for something that's going to double my money, 4 to 5, 6 years. And that's all I care about. I don't care about the cash flow. I have a job. I can't be monitoring this all day long. So we want to make sure we're in alignment with what our investors are looking for. Another one, over promising returns. I belong to a family office. I take my deals and I take them to my advisor at my family office. And I'm like, what do you think about this deal? Those returns aren't high enough. And I'm like, I could over promise you a 12% cash on cash, but I'm not going to be able to deliver that. I'm only going to be able to deliver you a 4 or a 6% cash on cash. Well, we're not going to show it to any of our people. My family office will show me deals, and they're like, they're promising a 12% cash on cash. And I'm like, how? And then in 6 months, I go, let's do a rewind. Let's go back to that deal that you showed me that's promising 12% cash on cash. What are we actually getting? Oh, we're getting 6. I go, I was promising you 6 when I showed you my deal at the exact same time. At least I didn't lie about it. You lied about it to get more deals. So if you start over promising things to your investors, you're going to end up in a world of hurt. It won't end easy. Your investor database and list first. Start talking to the people that you would like to invest with you today about what it is you're doing and how it's working for you, so that they will come alongside you and want to participate in what you're doing. If I went to you, Jason Olds, and I said, Jason, I got this amazing investment I'd love for you to invest in, immediately your wall goes up, because I'm not coming for you, I'm coming for your checkbook. But if I come to you and I go, hey, I've been investing in apartments for the last 14 years, and we're meeting for the first time, And these are the kind of returns I've been experiencing. I'm currently working on a project. Is it something you may want to take a look at? Would you like to see what we're up to? I'd like to invite you to participate. The words we use bring the wall down and allow us to communicate. And there went Jason. His video, oh, there he is. He moved on my screen. You went from here to there. I'm not sure why. But you want to be able to bring the wall down so that Jason and I can have a conversation around it, and he's not feeling pressured to pull out his checkbook and write a check on that day. When I first got into this, everybody would run around the room and they'd hand out business cards all day long. And then next thing I know, I'm being, and you can write this term down, pitch slapped all over the place, because everybody's trying to sell me a deal that I'm not looking for. And so I have a term for that. I call it getting pitch slapped. Literally had 4 deals come through my email today. I see you're raising. As soon as you're done, you want to jump on mine? No. Who are you? And how did you get my email? So build your investor database first so that they understand what you're doing, why you're doing it, how you're doing it, and what their outcome is going to be. Transparency. That's a big one in today's market. If you are a limited partner in deals and you're not getting regular reports, when I started, quarterly reports were great because cash flow was amazing and people were getting distributions. And when you had to stop distributing cash because interest rates went up, insurance rates went up, our cash flow, which squeezed cash flow, you better be reporting to your investors, i.e., we made 190 grand in September. October, it was 192. Why did we make 2 more grand? What happened there? What are your expenses from this month over this month? What's the cash in the bank? What's your cash flow overall? What's the current NOI of the property? And how's that trending versus what you promised in your underwriting? We should be sharing that stuff on a month. I'm sharing it on a monthly basis with my teams, because the more information, even though our newsletters on properties, our open rates under 10%. And I know that because I work with Go High Level and it tells me my raise emails that go out, I have a 45% open rate. So I know when people they see the name of their property in the subject line, they're just not opening it. They're just probably moving it over into this, or they have it go into automatic into another box. They're not always going to read them, but our job is to make sure they get them. Our job as syndicators, capital raisers, asset managers, is to make sure we're providing information on a regular basis. Be transparent. And that leads me right to number 10 is poor communication. So transparency and communication are really solid. And that leads right into number 12, the follow-up strategy. How are we following up with our investors once they're in? What are we doing? Underestimating fees and costs. And I'm going to raise my hand. I'll be the first one to raise my hand. On my very first deal in 2021 that we raised money, I'm glad we overraised about $500,000 because we did not see what was coming with the interest rate hikes and the insurance hikes. And thank God we had reserves. You have to sometimes overestimate what your costs and fees are going to be, because we don't know what's going to happen. And I'm not saying I was perfect. I'm saying I was lucky, because I didn't really understand the way this business flowed and the way it worked, and the way sometimes occupancy ebbs and flows from 90% down to 85%, and then sometimes to 80. And then you have to do some specials to get it back up to 90, 95. It's a dance out there to make things work all the time. Improper use of funds. This one's huge. I raised $14.5 million on an opportunity. I'm not going to tell you which opportunity it was. And we were going to renovate 50% of our units. I decided 4 months into the project, Mike Guthrie is going to sit in on the property management meeting and let's see what's going on. And so I asked the question to the property manager. I go, so for these full renovated units that we're spending $16,000 a unit on, how much more rent are we getting from them versus our classics? Anybody want to put in the chat what they thought the answer was that I got? Not enough. Susan, Elena, they knew exactly how much we were getting, and so did my asset manager. We were getting $0 more. So I immediately said to my asset manager who was on the thing, I go, we will not be doing any more upgrades. Whatever's in motion and offline already, we will finish, but we are pulling no more off. 2 weeks later, I get back on the call because I skipped a week just to give them some time. Get back on the call and I go, how are we doing on those upgrades? Property manager, we just took another 8 units offline this week to do full upgrades. And I go, this is probably an appropriate timing. I go, dear asset manager friend, partner of mine, didn't we have a discussion, say we weren't going to do any more? He goes, no, you said not to do any more. The business plan is to do them all. And I immediately said, we'll be on a text string within 2 minutes with the other partner and we will have a vote. We had a meeting that night. Partner asset manager starts talking about all this. And I go, how about we just say how much we're spending on upgrades and how much more money we're getting? And we did that. And we took a vote. And the vote was to stop. There's no point in spending money if we're not getting a better result. So improper use of funds, us new guys don't always understand that, but as a business person, I completely understand it. You can't be spending money that's not returning more dollars to the asset. This one's probably fairly obvious, but it's not necessarily in the capital raise space. But when you get online to do a webinar, you want to have a strong presentation. So number 16 is, it starts with teams and partnerships, but weak team presentation, not showcasing the credible and experience of the team. I literally have not raised money in almost 2 years, not anything of any significance. So when I decided to partner with Rise 48, who started in the Sumrock program early 2019, they're buying asset number 57. They have over $2 billion of assets under management. They've not had one capital call. They've had 11 exits with a 2x equity multiple in under 18 months on 11 separate assets. It's all right there if you wanted to see it. I'm not here to promote them. But I had to have a story, and I wanted to be with a credible team that has a good track record and hasn't went back to the investors. It's bad enough we put one hand in one pocket, but when I bring my other hand in and take the money out of your other pocket because I made a mistake and I need a cash call, or I didn't do things correctly because I was on a weak team, or I didn't have a credible story to actually bring enough money in with our investors. Make sure you have a credible team and a credible story. We all paid our money to be here in the mentoring program, or paid our money to be in the mastermind, and we all want to be in a deal. I never wanted to be in a deal other than just my cash. Never. It was not my goal. I was literally sitting with Brad at a lunch place in Dallas, and he's, what's your plans for 22? And I go, or the rest of 21. And this was like April. I go, I'm coasting, man. I am not doing anything. I'm parking money in deals and I'm just coasting. I don't have to work. I don't have to do anything. And he's, bud, let's go. He goes, I'm 55. I'm putting my foot on the gas. And I'm like, I'm 54 and I'm not. I'm ready to slow down. But he got me motivated. And then I got asked to be on a team, and capital raising came easy. And I found a new motivation. I found something I really enjoyed doing and I loved the relationship building and the talking to people. So then I got back in, I started raising money. So I jumped on a few different teams, and people that are on here that know me know of the teams that I'm on. And there's nothing wrong with them. Out of the gate, none of them cared for me too much, because I'm about the asset, and then I'm about the investors, and then I'm about us, the team. And you can get the first two intertwined, investors or asset, but if you put yourself in front of either one of those, you've made a mistake. in my opinion. We're here to make money long term. I think that's all of our goal. But if we fail to take care of the tenant and we fail to take care of the investors, we won't have those investors for our next deal, and we won't have the tenants renewing to continue to grow our asset up and to the right. So you want to make sure you're on a credible team that knows exactly what they're doing. So that leads me right into number 18, choosing poor partners. I think I covered that. Execution, rushing through your due diligence. Most people will they rush through the due diligence so then they can get their purchase and sale agreement signed and get off to the races to start raising capital and start putting the whole deal together. If you rush through due diligence, we'll have a problem. I'm going to give you another example. I'm in a couple deals with this one partner, and she was a partner on another opportunity in another city down the way, San Antonio. And she asked me and my wife to be partners with her. So we all ponied up $15,000 of non-refundable earnest money. And we were buying it from a partner that she was partners with. And they had said they'd replaced all the old steel or rotting sewer pipes. And we put hard money down to get the deal under contract so we can't get our money back before due diligence was done. And during due diligence, we found out we had crushed sewage pipes, and they refused to give us our money back. It was hard money, and we rushed through due diligence. So I'm telling you, I am just like you. I want to get in a deal. I want to do deals. And sometimes when we rush, we make mistakes. So one recommendation, work with somebody that's gone before you as a partner on deals so they know what to look for and how to look for it so that you can avoid some of the costly mistakes I've made. And then the last one is neglecting post-close support, failing to provide ongoing communication of performance updates to investors. I think we covered that with other communications out of the gate a little on the front end. So I'm going to go ahead and take a question real quick. I'm just going to call you Mr. Chen because that's probably, I'll mess the rest of it up. So if you want to unmute yourself and ask your question, I'm happy to answer if I can.
Hey, this is Albert. I actually received your email about the Rice Bridge view. I also did the two capital raise for Rice 48 this year. My question is, during this kind of a race, I get multiple people ask this question, like, what is the worst risk? We know that this kind of a private equity syndication, the worst case is all money gone, right?
Absolutely.
This is a true answer, right? But every time I give this answer to the investor, they freaked out. So how do you handle this kind of questions?
How do I handle that question?
Right.
That's a great question. So just in case you didn't, if everybody didn't understand, the question is, when you are pitching a deal to your investor database, you get asked the question, what is the worst case scenario that could happen to my money? And it is, we could lose it all. We could put bad debt on it and the bank takes the property back because we're not paying the mortgage. That's the worst case scenario. Another bad scenario is we're underinsured and a building burns down. I'm in an investment with a very seasoned team in the Sumrock community, 20 buildings on this complex, and 2 of them burned down. They had to take their reserve money, rebuild the buildings, get them back to code, get certificates of occupancy, and then the insurance released the money, and they released the money to the lender, and then they had to fight the lender to get the money back. So after they had fixed the buildings, had them re-rented, 4 months later, so it was about a 9-month process, 4 months after they've been rented and running again, they finally get reimbursed by the insurer that had given the money to the bank. So the bank gave the money back to the syndicator for repairing the buildings out of their own cash flow. So worst case scenario, I always tell people you could lose all your money because we could operate it really bad. The good news is we're buying multiple buildings and they're typically not stacked one on top of each other. So if one burned to the ground, we're going to have a little bit less rent, but we're not going to lose all of our money. And if we operate it with integrity and we take care of the tenants and get the renewals, hopefully at the end of this project over time, we are going to be able to return your money and bring it home with certain friends. Like I'm 3 years in on my first deal right now, a little bit over 3 years and a couple months. I'm getting the questions, how soon can we sell? And I go, we could have sold this summer when I was looking to refinance the property because we had 4 separate offers. But we were going to take a 800,000 between, we're actually going to sell it for more than we bought it for. But after you pay all the fees and everything else, we were going to take about an $800,000 haircut across the $6.5 million capital raise. Me and my partner decided that wasn't the way we wanted to go. So we extended the loan, and we're in better shape today than we were back then. Interest rates have come down 3/4 of a point, and we're on floating debt. And I was just actually looking at my statements, and over the last 3 months, my mortgage on that one property has come down $11,000 in 3 months. So now I'm paying less, so I have better cash flow. But we could have sold it and taken a little bit of a loss, and everybody gotten most of their money back. They lost about 10%, a little over 10, 12%. But the opportunity for it to go to zero is limited. But if you're not operating with integrity and putting the property and tenants first, you're going to have problems. The other thing I've noticed in a couple of the teams I'm on is our asset managers micromanage the on-site manager. It's happened. And once you remove back and let the property manager do their job, they're usually pretty good at keeping the tenant base up and keeping the units rented, because they aren't only managing your asset in that submarket, they're probably managing multiple, and they know what it takes rent wise and product wise to keep heads in the beds. Any great tip? Ask for referrals. Absolutely. When you have investors that are investing in your deals, if I'm a high net worth guy, do you think I hang out with high net worth people, or do you think I hang out with low net worth people? So if I'm investing in your deal and you're looking for more deal people, ask me for a referral. Like literally a year ago, I didn't have a deal in December. And I had people calling, go, hey, I need a deal. I need a deal. I need to be in a deal. Great, here. And I referred them to a friend. And the friend got that investment. And now they may even get that investor. But those people still call me because they still want to invest with me. But asking for referrals from your current investor database. And when I say current investor database, I'm talking about the investors that are investing. I have a list of a little over 2,500 people, and about 225 people actually invest in my opportunities. So when I say investor database, that's my 225 people. I will ask them for referrals. I will not be asking the people that aren't investing. And I don't take those other people, those other 2,200 people off the list, because one thing I've learned, the more deals I do and the more they see things moving one direction, more people off that 2,500 list come into deals in the future. First deal, I had 45 investors. Second deal, 60. And it kept growing because people would start going, this is what he's actually doing now. He's not just selling ATMs anymore. So be consistent. And when you're not raising, it's not a good idea. I'm telling you right now, going from cold and no traffic raising to raising now, for me, I needed the rise story to help really propel me. Even though I have a great database of people that like to invest in what I do, I wanted to have a good story, a team with a good track record, and a launching pad to relaunch my capital raising. Any other questions? We have about 20 minutes left. I can go over a couple more things. Let me scroll back here. We answered the how do you find deals? You raise money and they'll find you. Pitch decks would take most of the time, so I'm not really going to do that one. If you want to talk to me about pitch decks, please go to sumrock.com and sign up for a private coaching session with me. We can do 30 minutes and I can do some pitch deck training at that point in time, and maybe even share some of what I've really learned. I did learn pitch decks from the guy that is the best, I believe, in the world. If you don't have this book, add it to your repertoire. Oren Klaff, Pitch Anything. This guy has raised billions and billions of dollars. Or follow Peter Diamandis. He's raised billions of dollars in the tech space. But these guys are, this guy right here, good friend. I could text him right now, he'll answer. Good friend, he's taught me a lot. And once you figure out how to write the scripts and we start having conversations, you want to be able to do this. And I'm going to get to you in 1 second, Jason. But this right here will bring more investors to you than ever before. Because what flipping the script is, if you're not understanding in the sales world, is I'm going to share how wonderful it was for me, and I'm going to tell you this may not be for you. And then you're going to respond immediately saying, oh no, that is perfect for me. And I'm like, I'm not sure we even have room. No, I really need to be in this deal. Are you sure? Yeah. Okay, I'll send you over the deck and you can take a look. You flip the script and they will tell you how important it is for them to be in your deal, as opposed to me telling them how important it is for me to get their 50, 100, 200, 500 or $1 million check. And I'm not bragging, I'm just saying this to impress upon you. Out of all the deals I've done, I have one $50,000 investor. And now I have a young gentleman, he's 28. He's come into my last two opportunities at 60 grand because he didn't want to be a $50,000 investor. And that's my next lowest. And so I have 150,000. Now I have a guy that's done two deals at 60,000. Then I get to 70,000, 75,000. So I'm going to be quiet for a second and let Jason ask his question.
So thanks for letting me ask my question. So my question is, what strategies can us as investors use to continue raising after we've raised enough to close on the property, but we still need to raise for our CapEx budget?
You just said it. You just continue raising. Why would you stop? And even after you're done with that, you may want to consider, and I might be speaking out of turn, after you're done with that raise for that special that one project, consider raising a fund. Hunter Thompson, who runs Raise Masters, I've raised more money than he has, but he's an education guy. I'm an actual doer. He's an education guy. He's raised about $70 million to his name, unless he's done a deal recently and he's raised more. Because I just did a thing with him here in Phoenix not too long ago. But the biggest mistake I've made, and he said it from the stage, is you need to always be raising. Always. Even if you're raising for a fund and then your fund goes and finds a home, there's some amazing syndicators out there. You probably heard Charlie Young speak. I'm not going to say he'll take your fund, but if you raise a fund of say $5 million and Charlie's got a deal and you go knock on Uncle Charlie's shoulder and say, Charlie, I got $5 million. I'd like to bring into your next operation. Where everybody's getting a 90-20, he might give you an 85 or an 80-20. You might get an 85-15 split, and you give your investors an 80-20 split, and you make the split, you make the spread. But you want to always be raising money. You don't want to just be going back to the pond fishing when you have a deal. That's one of the biggest mistakes and I'm with you, we make, is we only come to our investor database when we need a check. We want to be coming to them with education. We want to be coming to them with continued opportunity. So it doesn't feel like, Jason, we just finished this raise today on ABC Complex, buying our Starbucks, and we closed, and it's now June 2025. Jason and Mike back out there. Hey, we're here. We've got another Starbucks. We're here for a check. And everybody's going to think, you don't even care about me. All you want is my check. You got to continue to nurture your people always. Does that make sense? Because you don't want to just show up when you need something. You want to be there even when you don't. Like, even right now, people I'm not even emailing this deal to, I'm actually jumping on my phone once a day sending out 15 video texts to everybody to all my investors that invested, saying it's the end of the year, if there's anything you need from me reporting wise, want to know an update on any of the properties you're investing in, just write call below here and we will set up a call and jump on. I have a deal. I could be putting in there my links to the deal I'm working on, but I'm not even saying I have a deal. I'm just reaching out to people like I do every 6 months and just saying, hey, is there any update you want from me based on what you've invested in? So I'm staying in front of them without the pressure of them feeling I'm coming for the wallet. Because at the end of the day, they're going to feel it. And you'll feel when they feel it, because they're not going to be up here like this in the screen. They're going to be sitting way back here going, does that make sense? Okay. Takeaway on a capital raise helps flip the script, and it helps bring in more money. And you want to make sure that you have what was the other thing I was going to say? Make sure your marketing materials are what the investor's looking to see, not how beautiful you think it is. They want to know about what they're getting involved in. They don't I'll see somebody's pitch decks and there'll be a page and a half about the sponsors and a biography that's half the page. They don't care about that. They'd like to see what we're investing in. Show me the building, give me the address, why this market. And that's the other thing, the whys. And this is probably a good thing to think about when you're raising money. Why me? Why this project? And why now? If you can answer those 3 whys for your investors without them having to ask, you've already gotten them over the hump quite a bit. Is there a question? Just checking the chat. This is the first time I'm not on the other side where I'm putting all my information in the chat. I'm usually doing that with everybody. Mike Guthrie, all these doors, this much capital, da 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 da. Sign up on my Calendly. All right, Julie, what do you got?
Did you say me?
I can hear you.
Okay, couldn't hear you. You dropped out. Is there anything else that you do, like the calling them every few months to say, is there anything you need from me? Are there any other little things that you do for your investors as follow-up so that they continue to look to you towards other things?
I forgot to bring it in. So every time we close a deal, well, let me ask you, maybe you guys can put this in the chat. What do you send your investors, or what do you do for your investors once your deal closes?
I would say a letter for them showing them the deal and that it closed and what we're starting.
Anything else?
Haven't done it yet.
All right, I'm going to help everybody out here. It's very simple. It's 2 words. Thank you. You know how many LP investments I'm in, I didn't get a thank you? And I don't know if there's any of my investors on here right now that have put into any of my deals. If there are, you could write in the chat what they get from me. There's one. What did it say, Mark?
It actually had the investment name on it. So it gave the date that we invested and the property.
So the property, a bottle of wine etched with the property name, the month and year it closed. Am I right, Mark?
Yes, sir.
All right.
And it tasted delicious.
Can do you want to tell them what kind it was?
I believe it was a Merlot.
You're close. It was Silver Oak. And that's one thing I do differently than most everybody else, because once you understand the power of the dollar that investor brings you, so for every dollar, so think about this as a general partner. Say you're on a deal with 3 people, you're equal partners at 1/3, 1/3, 1/3. Every dollar you bring in as a GP, and you go, okay, 5 years from now, if we sell this according to pro forma, how much money will I make for every dollar I raise? As the general partner, not on your limited partner piece of your investment that you put into your own deal, your own skin in the game. How much per dollar will you make? And once you figure out how much you're going to make per dollar, A $200 bottle of wine is nothing to give back to an investor that gave you 50,000, 100,000, 200,000, $1 million. It's nothing. I have a doctor in Houston that has a row of 11 wine bottles. And she sends me pictures. I can't believe I've done it again. I can't believe how much more money I've given you. But she's got a row of wine bottles from me. And the people, even the $60,000 investor that's coming into this deal I'm doing currently, is going to get a bottle of wine from Silver Oak, etched with Pacific Capital Bridgeview, December 2024. That's my thank you. I just put a spreadsheet together, send it off to a lady. She nicks my credit card for a couple grand. And I say thank you. And they ship it and they deal with all the logistics. I don't deal with any. And they get a nice thank you letter note that I've created that they type on their little card stock and they send it to them. We forget sometimes that we're asking people to trust us with their hard-earned capital. And the very least we could do is take a card, fold it up, write a little hand thing and send a thank you and spend the 40 cents on a stamp and $1 on a thank you card. You don't have to do what I do, but I highly recognize Tony's got a nice bottle, a glass of wine going there. I seen it. I wished I did. I have a soda. I don't want to get fired from the Sumrock team yet, but we so often forget to just say thank you in anything. The person at Starbucks that makes our coffee that we spend $6 a day on. Thank you. We could all be more kind. And I'm guilty sometimes too, but I try my best, especially when I'm asking somebody to trust me with their hard-earned money. Like I have an investor that invested for the first time with me today. She put $200,000 with me. Never invested in anything I've done. 200 grand. I was floored when that deposit. I didn't even call her. She's somebody I haven't even called yet that committed, but I haven't even called her yet. So I was giving people a little bit of time after Thanksgiving to relax. Tomorrow, everybody gets a call. Everybody that committed gets a call tomorrow. Because before I get on a plane to head for Miami, everybody gets a call. But we have to say thank you for those people allowing us to do this business. If you ran your own business, say you're a cleaners and they bring all their dry cleaning to you and they come in, they pay you $100 a month for all their dry cleaning. Every time you handed them back and they hand you this money, typically the person behind the register says, thank you. Because without us as clients, they don't have a business. So am I making sense? I appreciate everybody being on here tonight. There was 41 at one point, but I am here. I am here to serve. Anything I can do to help any of you. It's my mission. I do this for impact. I don't do it for, I get paid, not to be here as a coach, but I get paid for making money on the one side. But when I get my acquisition fee in a few weeks, it's all going to my church, 100% of it. And then I'm still going to buy the wine out of my own pocket because it's impact time. That's where I'm at in my life. It's completely different. I don't have to do it. I love to do it. I love giving back. Marguerite, I love you. For those of us that don't drink, there's always crypto or precious metals. You're absolutely correct. And I love you, Marguerite. You're an amazing lady. Anybody have any questions? Anybody want to come off mute? Ask anything? We do AMA. Ask Mike anything. As long as it's mostly real estate related.
Michael,
Yes.
and this is Susan. I've chatted with you. Can you send me your contact information so I can get in touch with you about your development?
I will put my information in the chat.
Okay.
I normally, is my keyboard not working? I just replaced the batteries this morning, so we'll see what happens. My computer's locking up. I wonder if my internet's going down. Can you guys hear me?
Yes.
Okay. I'm working on it.
Okay. Thank you.
I will do something. Tell you what, Susan, I'm gonna, and everybody
I'll
can
be at
write
the
it.
Christmas
You can write it
party.
down. I'm gonna give you my cell phone. You can just text me, and anybody can
Okay.
text me. I
Okay,
don't. When I do podcasts, typically when I can get my thing to type, I put my cell phone and everything in the chat. So this isn't. I give it to everybody. It's 509
okay,
270
okay,
6701.
okay.
And if anybody has any questions after we get off tonight, you can always text me the questions. If you didn't get the number, I'll repeat it. 509 270 6701. Thank you, Benjamin, for putting it in the chat. That was amazing. Appreciate you.
Thank you.
But if anybody has any other questions, I'm here and I'll stay till we're done. Stay till we don't have any more questions. We're hitting the top of the hour. I know some coaches like to duck and run. I don't. I'm here to serve. My wife's in Destin, Florida at an energy retreat. So it's just me and my dog. So I have nowhere to go unless I'm going to go find some dinner. I'll go over that real quick, Walter. It's so if you go, so with Rise 48, and I don't know how they did it with Mr. Chen, but with Rise 48 for me, if you go with them directly, it's a 70-30 split with a 7% pref. If you come with us, it's an 80-20 split with an 8% pref, and the pref is paid before any of the general partners get paid. I am not a general partner on that opportunity. I am a fund as a limited partner, and I get a little bit better economics than the 80-20. So that's how I get paid.
Oh, yeah, we did similar. We
Okay.
did similar thing for the two deal with fund to fund with them.
And the reason Zach does this that way is that he gets multiple capital raisers to come and raise capital for them. And I will write a $2 million check as one person or a $3 million check as one person, as opposed to him having to deal with, say, $60,000, $50,000 check writers. I get to deal with all the people that are under my fund, and he gets to deal with me. So that's how they did it with that fund. So Walter, if you're looking for people to help raise on your fund, maybe you do a structure where you go, here's what you get if you come to me directly, but if you come through the fund manager, and so you get somebody else go out and raise you $1 million, $2 million for your fund, they get a little bit better economics than if somebody comes to you directly. But you want to make sure you're structuring it where they're going to bring you a minimum check size. Otherwise, you're just diluting yourself. I know you don't understand that. If you don't, explain it.
There's a fund cost. Those are the legal, the portal, the everything. So you need to break even.
That's all over the board. I'd love to do that as another class, because a fund with Zach costs one thing. A fund and portal cost, if I was to do, say, my own fund, it's between $10,000 and $15,000 for the legal, where I get a deal because they have an attorney that does it all the time and they're using their portal. So I'm not paying for a portal. But if I was to do mine and use cash flow portal, it'd be whatever cash flow portal charged me for that, plus whatever the distribution costs were for me to send out the distributions and my CPA for the K1s and all that, where Zach covers that for me inside my fund. Anybody else?
Thanks for the time tonight and sharing, Mike. You and I actually did a call a couple of years back. You were driving somewhere, and you were as gracious then as you are now. So thank you very much. I appreciate it.
That's why we're here. If we're not here to serve, we're here to be served. And sometimes when you're on the take, you're not going to get much. So it's always better to give than to get. And the more we give, the more we get. At least that's been my experience. And I appreciate you saying that. And thank you so much.
Okay. Thank you.
All right. There's nobody. I'm here. So if you have anything, I will stay for another 5 or 6 minutes if you want. If not, we can end it and call it good. It's all up to you guys.
Thank you, Mike. I'm gonna set that separate coach call with you to have a lot more questions. Because my first two deal is the second one harder than the first one. I need to learn from you.
I had one other thing I wanted to share. The second investor is always easier to get than the first. And the reason I say that is when you go to pick up this beautiful piece of equipment for the first time and start making those phone calls to get those investors to come in, This thing weighs like 1,000 pounds. But once you pick up the phone and you make your first call and you get your first yes, all of a sudden it's no longer heavy. I'm running downhill, not running uphill anymore. And you go, okay, if that person's in, I know this next person's in, the next person's in, and it's like running downhill. So it's all about picking up the phone and getting going. If we could, this isn't 2022 where I could send out an email and raise $6, $8, $10 million in 3 days. The times have changed and the investors have changed. I did a whole spiel a few months ago at a conference where I was talking on the book, Who Moved My Cheese? And it's who moved the investor's capital? Where did it go? Why isn't it in multifamily anymore? Is it in storage? Is it hiding underneath the trailer park? Is it in a debt fund? Where did it go? And why did it go? And I get off the stage after I explained it to everybody, we need to have a questionnaire with our question time with our investor to understand what they need. And I'm going to share the story that I had a coaching call with a few of you in the last week. And I shared this, I believe. I went to the restroom, I got off stage, I come back and this guy comes up and goes, I'll give you 50% of my GP if you'll raise the last $2 million on my deal. And I go, did you just hear me talk? And he's, yeah. I go, do you know what I need? And he's, no. He goes, I need $2 million. I'm willing to give you 50% of my GP. I go, hi, I'm Mike Guthrie. Nice to meet you. And best of luck. If you don't know what the investor needs or what a capital raiser is looking to do, shoving it down their throat's not going to get it done. That doesn't create anybody wanting to write a check. You have to understand what the person on the other side of the desk, on the other side of the phone, on the other side of the video, we have to understand what they need in order to get them to participate in what we need or what we would like them to participate in. All righty. Yes, Walter, you have your hand up.
Yeah, I'd just like to say, Sayun and I, we so identify with what you just said. Sayun and I have a pretty broad portfolio, and they just naturally assume that we're looking for a multifamily deal, and they don't really realize we're looking at other things in investing. And we may be looking for cash flow. We may be looking for certain rates. And I so appreciate what you just said, because if you're just constantly drinking the same water, it always tastes like water. But sometimes we want it to taste like wine, or we may want it to be whiskey. So we're trying to find different ways to look for things that we're looking for. And we appreciate when we have our partners are asking us what we need right now, because we can make those investments. We just want to make if it is the right investment for us right now. So thank you for saying that. It's a great point for us.
Awesome. Glad I could be of assistance there, because you don't know what they're looking for until we ask. And like I said, even with a multifamily, we can talk about depreciation, we can talk about appreciation, and we can talk about cash flow. You get all three. It just depends on what the investor wants to hear.
Right.
And you can find them all that's available to you. All righty. Anybody else got a question? All right. I'm going to call it an evening. Thank you all so much for showing up. I appreciate you. And if I don't see you down the road here at the party, I'm supposed to be at the party unless something comes up next week. But everybody have a Merry Christmas.
Thanks, Mike.
You betcha. Thank you.
Merry Christmas.